It's a day trade, so it's just at the market, right?
Yes, whenever you day trading options, just do at the market. But like I said, I was trying to tell you before market, if there's some momentum,
Uh-huh.
if you're getting in when things are taking off, get a strike, get the strike that's like it's going into, get the strike it's going into. Because what's cool is whenever the price crosses through its strike, you get this acceleration in the delta and the price that you're getting in return. So you buy it at a good ratio, and then by the time it's crossed the strike and it's on the other side, you are already, like double, and it only went just, 25 cents from 25 cents down to 25 cents up, and it can give
So
you a
you're
lot.
not necessarily looking at the one that has the most volume and open interest.
I always just pick whatever the strike it is because usually, and that was just really rare this time. Usually, the hot stock of the day has tons of volume, and it creates a lot of liquidity. I think maybe it was because they locked out the options for 8 minutes, and so when we got in, the
Yeah,
spread
people
was like
people just moved
$3.
on,
Mm-hmm. It was
and
not good, and it didn't really
when they
settle
couldn't get
in.
filled, they just moved on.
Yeah, exactly. And what else about that?
Oh, one more thing,
Oh,
because
the other one was by the time the dust settled a little bit, it looked like the 400 was 5 times as liquid as the 395 that we went in. You could still trade. You could even have traded the 410, for example, from the 395 level. You could have traded the 410, but it's not going to move sensitively enough until the price goes through it. Then it's going to really wake up. So until then, it's a parabolic curve. You're not going to get a lot of sensitivity until it starts getting really close, and then when it crosses it, then the parabolic curve goes the other way, and you get this huge steepening right through the strike. So
oh, I was asking about the at the market because you know how Mark always buys out out of the money.
yeah, I think that's a little crazy for the reasons why I just said. Um, how long has he been? I think the option thing is kind of new for him, right?
I'm just trying to understand why, but it seemed to work. Like there's this guy that posted in the chat room today. He said that he bought Tesla yesterday, which probably was in the 360s, probably towards the close, and it was a $7 contract. So that was definitely, I was looking at it. It was definitely out of the money. And then he said that, because it ran up today in the 380s, so he made a bunch.
Well, also you guys should know that tomorrow, Friday, God help us if there's a good day and a good opportunity tomorrow. But you should know that tomorrow, Friday, is one of the best days to trade weekly options because there's very little time premium that they're charging you for them. So it's almost like getting it from the strike price up, getting stock from the strike price up for next to free or very cheap compared to if you bought it Monday. You'd be getting the Tuesday, Wednesday, Thursday, Friday price of time. You'd be buying into that, even if you were just trading it Monday. But Friday, you're going to get the purest, rawest pricing on your options. So, God help us, hopefully tomorrow, if there's a good day, which I
So
don't
tomorrow,
think I can kind of predict tomorrow because I'm used to these candlestick patterns. I'm pretty sure that tomorrow is going to go up about 75% into today's candle, and then it's going to start to tank and it's going to go down and through the bottom again to continue to retest. It's not a finished move. I think we're going to go into this weekend pretty bloody, but I'd be happy to be wrong. That'd be great.
so you mean tomorrow, if I want a day trade, I buy the 9/11s or next week,
No, no,
Friday?
you buy the 911. Yeah, always, always, always buy the shortest option. If you know 100% sure that you're not going to end up holding it at
Right.
all. But if you
Yeah.
want the option to hold it, you're going to have to pay probably 50% more to get another week of time on it.
Okay.
But you should just go in saying, look, I'm not gonna fucking hold this. If this thing goes against me, I'm going to cut
Right.
it. You should
Yeah,
just go
I don't
in.
have
I'm
my
buying
finger
today's
sell button.
expiration. What?
All right, so get into SPY your entry.
Okay, yeah.
But you were playing puts today on it. Yesterday you
Yeah.
were playing calls.
Did I? Okay, well,
Yeah,
look at that. I mean, it looks like that's the right way to play it. I don't think I played Spy yesterday, did I? Okay,
did
maybe.
several times. Because
Okay.
I was like, I should, but I couldn't pull the trigger tomorrow. I mean,
You
yesterday. I don't
know,
know why.
the market
I
is
was just
not always this aggressively directional. It's really useful, to be able to, it's really useful to be able to trade puts and calls on the SPY. I just, for the first time, tried that on Friday last week or Thursday last week and made a ton of money. And you can only do that when you see something that is going to be all day. Something going on that's going to be all day. And I knew today that the worse the market got, the worse the market would get. That it would be a feedback loop. We're going down. Okay, so then shit, we're going down. Okay, then we're going down. I just knew there would be no way out of that. So I knew that I could safely take puts. But on a choppy day, I think another day, like Tuesday, I tried trading SPY
which
again.
chart is this that you have up? Is this SPY?
Yeah. Yes.
Okay.
This is today and this is yesterday. You said I traded up yesterday and that's the way.
Right. Yesterday made sense that you were trading calls because it just went up from the morning.
Yeah.
It only went down a few times and it still recovered.
I think I distinctly
Yeah,
remember
I think
grabbing
you
it right
played,
there.
yeah, this middle part is what you played.
And then this trend was really easy to hold on to. And then I
Right.
believe I cut on this like triple top action here. And so I got a really nice move there. And so like what I've learned from penny stock trading is take a smaller move with a larger position. So, on that I forget, I think 20 contracts the other day, which was the max of that account. But today I got 100. So it was much better. All right, so let me zoom in here and show you how I judged the price action and where I got in and everything.
While you're doing that, even so, volume and open interest. Is there minimum that you look for that it must have this much of volume or open interest for me
For
to take the
swing
trade?
trading, not terribly liquid is okay. If it's got no volume and 1,000 open interest, I'm okay with that. If it's got 30 volume and 60 open interest, that's a little iffy. I'm going to look at that spread a little bit. I might go so far as pull up that chart and let me see the option, how it's been trading. If it looks like just like 3 points, like when you find a dead penny stock, no way. But
Can we
if
pull
I'm
a
day
chart?
trading, you want to have a lot of liquidity. I want to see hundreds, if not thousands, on both of those.
So
Okay.
can you pull a chart for the option in Thinkorswim
For which one?
for anything? Because you said pull up the chart on the option
Oh
just to see.
yeah, of course. Yeah, like the SPY here, I can just,
Oh,
email
I know. You have to do the dot, whatever it is.
SPY 200911
Okay.
call
I forgot.
334, and then here it comes, boom.
Yeah. Okay.
And I have it. You can set it in the settings. I have it. The purple line is the theoretical or
Mm-hmm.
the theoretical option price, and then which keeps changing, by the way. And then of course the bars are exactly where it traded. That doesn't look too liquid to me.
So the open interest, um, it doesn't change during the day because that was yesterday's, correct? Like if it was showing 1,000 in open interest,
I think I've seen it
actually
change.
from yesterday's, not today's.
I don't know. I think I've seen it change during the day, but if you're right, then okay. Maybe I was just hallucinating. But Yeah, open interest just tells you how many people are holding contracts. What I
Right.
have seen, oh, and I think that's what I mentioned to you before, was I've seen volume occur and open interest not change. So maybe you're right.
I read somewhere, I don't know if it was Investopedia or something, that's
Okay.
one of my go-to things.
Yeah.
That's what Tim Sykes recommends anyway. But I read there that open interest, that's why I wanted to ask. And I mean, I don't think I've watched, to really see that it doesn't change, that it's not static, the open interest.
Yeah, I don't know. So yeah, we can look
It
that
just
up
says
later.
that
Let me know what you
it's
find.
basically the day before the volume, I mean, the open interest as of the end of the day before.
Okay. All right, well, let's see. So on this, I believe I got in on the first SPY puts. I should check the history. Um, but I do believe it was, I saw this fall here. Okay, the real play that I was going after each time was when I saw that a trend was clearly trending and towards the potentially breaking a new low of the day. So it was that combined, you know? I wouldn't have just taken this trend if like there was a lot of price action over here because I'm just kind of like guessing on the middle end of something. But
So you
here,
don't even do the puts right at that first uh,
like I
mark,
didn't do puts
big
way up
dip right
here.
there.
No, I didn't do puts here. But I saw that this trend was trending, and I believe I may have gotten in here. I believe I got in on this like dark, once it broke this like double, this level here, which was like a double bottom, I knew if that breaks that, then we are surely heading down here and we're going to test the low and we might break it. So I got in here, and then as it went up, I started to double down and get some more puts in here, and more and more. And of course, I'm getting like, oh my God, this better turn around soon. And then sure enough, boom, there it was. And I was like, all right. So now when I was looking at, negative $1,200 at that point or something, and I think I had built up 60 contracts by the time I was over to here. Um,
Which one is this? This.
SPY. SPY.
Okay.
Yeah. Okay. So I knew when it was over here, if this double bottom breaks, that it could race down towards breaking this bottom, which would be very significant, and it would probably cause a lot of panic in the market. It would indicate a lot of panic in the market because remember, this is a index. So yeah, I had a lot of puts by this point, 60, which probably the price average was right around here. And so when this puppy went way down here, I sold once this candle started to show like lacking momentum. So it was lacking speed, You get good at that as a trader. You can see it.
Was that
And,
midday? Because
and then what's that?
was that midday? I'm trying to look at, what
Yeah.
time you were alerting that it
Yeah.
might
Well,
go
I
to.
don't. Yeah, I don't know if I alerted that though, because like I said, I think you messaged me, like, oh, you got into puts. I didn't see you message that, and I was like, oh yeah, you don't want to do that because it gets pretty hairy. Because like right here, you'd be losing money. You got to be willing to hang on and even double down and average in, because of the great potential. Because if this went up here and I had to cut losses at negative like $3,000, I would have been okay with that. Just because I know that if this goes down here and it breaks that low, it's going to be a nice run. And I think it was like $6,000 or $7,000, and I started dropping contracts right around here.
How many contracts you traded? Even
I think I had 60.
60?
Yeah, I think I had 60. And I
Nice.
don't think it was that expensive. I don't remember it being it too bad. I think it was like $18,000 or something, 12,000. I mean, it wasn't like 50 grand or something.
Mhm.
It wasn't too bad. So it went down here. Obviously, I started dropping contracts and kept it in. I kept dwindling contracts out, and I think I probably exited some final contracts around here. And I, at that point, probably only had like 15, 10, 5 contracts left. So, but I got the bulk of it, over
The
here.
RH CEO is on CNBC with Kramer.
Ha!
Let's see if the price goes up.
Yeah, they need it. They probably paid that $250,000 to have a spot on there, huh? So I think I made $5,300 on that total move, if I remember. So then it kept going up and up and up. And I said to myself, okay, next time I see a trend coming down and that might break that low of the day, I'm going to do that again. And so I, was monitoring it. And when it
Hey,
broke right around here, I felt that was similarly as close as before. I knew that if I got in here, which I did, that if it got into this area, it could get choppy and it could give me a lot of resistance. So I knew that it wasn't going to be easy. And so I think for that reason, I only got 50 contracts. And
Where?
then
What point?
that's why you walked away over here.
Oh, okay.
I got 50 contracts. I think when it went above my entry point, I grabbed the more contracts because on the put side they're cheaper. If this goes up, the price of your puts goes down. Obviously, you're losing money, and so you can buy some more at a cheaper cost. I think at that point, I may have had 50, 40 or 50 puts, but somewhere along here, and I forget where. Let me see if that goes to the end of the day. I think it was right in here somewhere. I loaded all the way up to 100 puts. And then sure enough, it continued down and it broke that low. And this was a great run. And I had like 100 puts in there. I believe it was that one, or it could have been this leg. But this was I mean, looking back at it, it looks easy, but you never know where the bottom is. So, I'm taking out contracts here. I'm taking out contracts here. And then I think I took out all my contracts right around there. And then I did it again, I believe, here. And got out kind of high, somewhere around here, right at the end of the day. So it was like three SPY put moves in a row. And each time, because it was going to break a new low of the day. Now, most stocks, when they break a new high of the day or they break a new low of the day, 85% of the time, they don't continue. But this is, representation of like the entire market sentiment, the S&P 500, So if panic is driving down the price, I think that's going to be pretty reliably that it's going to cause more broad panic. And if elation is going to drive up the price, on the contrary, it's going to drive up the elation. But you won't find that on individual stocks so reliably. This trading the SPY is a great idea.
Yeah. Hey, even so at the money contract, right? So you're looking at the chart and then you have this contract. Um, uh, so what's the contract like price? Like it's
The price,
yeah. What was the range for the yeah? What
I
ask and
think,
bid spread?
it depends on which strike you choose, but I think that when it was, because sometimes the strike can be a little beneath in the money, and sometimes it can be a little above out of the money. It's never perfect. But I think it was something like around between $1.70 and $2.40, like $200 a contract. So when I did 100 contracts, I think I remember that costing 18 grand. So I think that was $1.87 or something.
Okay. So, each contract in options is by default 100 shares, right?
Yes.
Okay. So, and then you have 180. So when you enter a trade, you monitor the contract prices, right? Like 180, your goal is to get like what, 220, 210? Like how does that, how
Like
the
at
range,
that time, I had SPY up over here,
right?
and you've seen it before, and then I had the contract here.
Okay, right next to it. Yeah.
So
Yeah. Yeah, that's the chart I wanted to see. Right.
so I think, let's see, I think that probably corresponds to one of those regions there, 1301. Okay.
So
I
you bought
hate.
a put 180, and what was your in your mind the target was like when that at this price I will start covering, or you had no target?
I
Oh,
think
that's a very good
in,
point.
in
I
Thinkorswim,
knew.
hold on. In Thinkorswim, I noticed this too. When you get that pop up box and then you hit the before you hit the confirm and send, it tells the break even price. It shows it. Is
Okay.
that
Yeah.
is that what
That
I
doesn't
mean?
even
Is that like
factor
for
though.
real?
That doesn't even factor when you're day trading though.
Uh-huh.
So anyway, he asked me like, what was my target? Like, what did I expect? And I expected about 1 point. I was hoping for about 1 point of the SPY move. So if it was going to drop here at 337.50, I was hoping for about 336.50. And I certainly got it, but I kept holding because it was why would I sell if I'm seeing
Right.
more candles?
You're in the money. Yeah. Right.
Yeah. But I felt, it could move about a point. I was looking historically here, like how much does it move in a trend? And 1 point was conservative, 2 points.
Yeah.
So
But
So when
then the break even information is kind of good too, so you know when to get out.
no, because the break even is at expiration, and so that's
Oh,
tomorrow at expiration.
okay.
Yeah, it doesn't even apply. Like most of the loss in the value of the option occurs now overnight. So tomorrow morning, the difference in price is going to be a big drop. But during the day, it is going down in value. If the price of the stock stayed the same all day, the option would slowly be going down in value because it's time decaying.
Right.
Okay? And then break even they're talking about is tomorrow at expiration. But that doesn't matter when things are moving around like massively crazy. You just take what you can get. And if it's like 12% off, that's okay. That's the way trading options are. They're kind of much looser than stock. And you get a ton of leverage. If you're getting at the money nearest expiration, you're getting sometimes typically 10 times leverage. So like, today I bought SPY for $2.80 a share and it trades at 335. So let's pull up the calculator. 0.008, and so we divide that by, how do you do that? Divide it by 1? 1 divided by, no? Oh, I didn't put the divided by.
0.008, you said, is
100
that the range?
116 to 1? Oh, divided by 100 because it was 100 shares. Wait a minute.
You're going to multiply, yeah, the range.
Yeah, hang on. Let's see. No, you don't need to do that. Let me think. I don't know. Apparently, from what I'm seeing, okay, I paid $287 for what would have cost three $33,400. Yeah, it is right. It's 116 to 1 leverage. So you're getting a ton of leverage on your money with at the money options. But typically it's like 10. I think SPY just gives you a ton of leverage. Because I think a Tesla option at the money for tomorrow is probably closer to like $1,500. The thing's probably going to turn off in 20 seconds, but we'll come back. I'll start up a new one.
Okay.
All right, let me just click stop now, and then you guys come
All right.
back.
Okay.